22nd of May 2022. I wanted to do a separate series of videos just talking about some big picture stuff. Yeah, it's so easy just to get caught in the weeds of the day-to-day and what's going up, what's going down. But I want to just force myself to just stand back and look at the big picture. So, for example, I've talked about this chart before. This is Daniels, I'm assuming that's how you say it, the shipping company. Had just a horrendous run, got sold off massively in the pandemic, and then from there had one of the most almighty sort of re-rates. Went from, just say, bought it around here, so $5 or so, all the way up to, was even got up to 100. Now imagine if you bought some out of the money calls on this when the chart started to set back up, and the Fed just turned the printing press on, the turnaround play. And of course, who knows what's going to do this sort of move? But we're talking like generational sort of money you could make buying out of the money calls on seriously sort of bombed out sectors when the time is right. So I don't want to lose sight of that. I don't want to sort of nickel and dime for the rest of my life. I want to sort of get myself sort of prepared for the next sort of a big upswing and really sort of get proper leverage to that. So I'm going to sort of stick with this theme of deep value narratives and black swans. So these are sort of just big picture things. Where sort of seriously deep value. Conversely, I want to discuss where are things just getting more and more overvalued as sort of people are getting more and more bullish. And I fell sort of victim to that a little bit myself. So yeah, I wanted to discuss that side of the coin too, what the current narrative is, and as we know, quite often if everyone's thinking something, that the market will go around and do the opposite. And also along a sort of similar lines, what sort of black swans are floating around out there. And that can be positive black swans as well. It doesn't have to be something that's negative, but it could be something that just comes along that just gives you a bit of a gimme. All right, so so I'm not going to just spend too much time on actual charts in this video. I just wanted to show Daniels as just a killer example. I didn't trade this one at all. I was trading growth stocks, but yeah, let's say deep discounted turnaround plays can be amazing. In fact, the two best trades I've ever done were in fact not even as much as I like growth names. They weren't growth names. They were two. One was a huge discount to NTA coming out of the GSC, and another was a huge discount to price to sales coming out of the pandemic. So yeah, and obviously that Roaring Kitty guy made an absolute fortune out of GameStop, which is very much a cigar butt type play. So anyway, I just need to be open to ideas and where the money can be made. And so let's. I'm just going to start with some background thoughts in this first video. This is a price to sales ratio of AMD. So one of the semis, one of the leading semiconductor stocks. Made good money out of it last year. Then when I started doing these videos, I was still trading the options here. Now I made a bit of a mistake. I think I was starting to fall for that narrative that the narrative was actually true, that there's huge demand for semis, massive shortage, huge backlogs, and that was actually true, and I believe that it still is true. However, the market was really starting to price it in. So look back in 2018, the price to sales was, this is a screen grab so I can't see what it was, but just, let's call it a price to sales, I think it was 3 or so. And then started to get the re-rate after that. And we saw a huge re-rate in 2020 and 2021. So when I started discussing these on video last year, the price of sale then was 12, 13. So we're talking, it's already had a huge expansion since over the last few years. And this goes back to one of the many things that you want to look for a price to earnings expansion as another one of the clues that a trade might be getting sort of towards the end of its run. So yeah, I just think this is probably really a case of great story, great company, but the valuation was just getting cooked. If I'd been a bit more alert and factored just basic valuations like these sort of things into my thought process, I might think, well, okay, maybe the chart looks good, but these things have already had a huge run, so just be on the alert. So maybe not quite as aggressive as what I did. I rolled up some options. Maybe should have just cashed out, just taken more off the table. So anyway, bit of a lesson there. AMD has actually been sort of derated quite a bit since then. So back towards well, who knows what a sort of a normal valuation is these days, but it's certainly been compressed over the last 5 months now. Next one is Tesla. Again, it's easy to forget that Tesla was a dog of a stock for many years, and I think 4 or 5 years at a time before it has these sort of gone through these big re-rates. So Tesla itself is 10x since 2020. And I've sort of discussed another video. This is all looking a bit this is a price to sales still, but this is all looking a bit stage 3 and maybe stage 4. And this week it really really has gone into stage 4. But anyway, again, look, price to sales was just like I don't know, sure, 2 or 3 at that point, and then had this huge valuation expansion out to 30, and still really kept sort of most of that, and now sort of it's just coming back in value. Now, I'll be the first to admit price to sale isn't in itself a good number, especially a company like this that's getting to scale. So once you get above the sort of fixed cost, the price to sale ratio becomes actually, this is over exaggerating the valuation expansion because as it gets to scale, it starts to make money. So at some point, a higher sales number actually leads to more profit, and therefore a price to sales ratio becomes less meaningful. Nevertheless, it's gone through just a monster valuation expansion. The stock's gone up 10x. Now again, this is something I should be just thinking about, or any of us should be thinking about when putting trades on. Has this stock, where is the stock sort of moved in terms of its valuation? It's had a big run. Now, I get it, it's the wonder stock of the century and all the rest of it, but everything can get ahead of itself. Now, ideally, you want to be buying coming out of a nice long base where, even ideally the valuation has been compressing as the company's been making more and more money, but the stock's been going nowhere. So you just have this, you want to get in this sort of trade here at 2019 or 20 when it reset up, when it's got that potential to have a huge valuation expansion. So is this a fair valuation for this thing? I've got no idea. I do know that that's a pretty big number. Obviously, a lot of controversy with Elon at the moment, which I won't know more about than me. So anyway, let's move on to the next one. Zim. So I sold the remaining call options on this recently. Got to be honest, that might have been a mistake. This thing just prints cash. It just prints massive amounts of cash, so much so that the market always just holds the valuation back. So it's got a P of 1.6, that's correct, a 1.6 PE. It would do sometimes these re-rates and come back, pay out sort of huge dividends as well along the way. Now, the interesting thing with this one is that's the current PE. Now, the 2023 PE is vastly different to that. The forecasts are for the earnings to start coming down sharply, which sort of makes sense to me as the economy is sort of rapidly slowing up. So the market's starting to look out, and I think it's on a P of more sort of 4-ish on a next year basis, which is probably more what a shipping company might be valued at, I think. So, and that was part of the reason for me selling it. It's had a huge run. It's had just an incredible sort of macro backdrop for making money, but as with any sort of cyclical stock, it's usually best to sell when the PE actually looks quite cheap, in anticipation of that E part of the PE just coming down as the cycle comes back. So chart's sort of telling me a bit different at the moment, that it could be ready to go again. So I could be completely wrong on this one, But yeah, we'll see. This is just another sort of interesting case in point. It's more the market mean of anything. So this is Mosaic, one of the fertilizers. So it's its valuation was sort of pretty stable. In fact, even coming down, going up until this calendar year. What's that, 8 or 9 or so, and then expanded very rapidly over the last few, until April, almost. So the PE pretty much doubled. And then, before it sort of corrected. So, according to the market mean of anything, it's just want to be, if a P is sort of expanded by a factor of 2 or 3, it's time to start being careful. And he was bang on with this one here. So, should a fertilizer be on a P of 16? I don't know, probably not. But anyway, gone on a huge run here, as the chart's sort of putting in more and more bases and looking more and more peaky. And then also, just think about the overall valuation of the company. Has it sort of moved up aggressively? The answer is yes. There's one more indication that the run's over. I thought that was it. Just one more, which is, where is it? Sort of Roku somewhere. No, I won't worry about it today. But I just started going through some of those other technology stocks, like Roku went through a massive price to sales ratio. That's coming back pretty sharply. So if we are looking more towards a market bottom, which I'm honestly just not sure about, I'm going to do a separate video on that, then I want to look for those stocks that have got to come back to a much more reasonable valuation, or reasonable / cheap, that do have that potential to have that valuation expansion again. So things like, Roku is starting to sort of come back on the radar. But we'll discuss that in future. But anyway, in the meantime, there's some sort of big picture thoughts.